Now, in addition to these macro sources of risk, again, risks that are outside the control of the company, there are a couple of other elements of risk that are inside or internal or intrinsic to the company. And I would say, I label those micro levels of risk. And there are at least two major micro levels of risk that we take into consideration and evaluate at Century Management very seriously. You've often heard us talk about companies that take on excessive debt and the economic jeopardy that that places them in. How many times have we heard the story of companies that get complacent about their business and try to eke out additional meager profits by jimming up their balance sheet, only to find out that they take a turn in business and get out of and lose their business. Usually it's not the sales volume decline that kills that business. Usually it's the required debt payment. The second internal source of risk that we examine in a business is associated with the management of the company. Sometimes the managers will put their business at risk, wittingly or unwittingly. Sometimes they fail to execute their business plan. Sometimes they seek grandeur by acquisitions and mergers. Sometimes they're just incompetent. But they do represent a serious form of risk to the business. So these are the things that we look at Century Management as defining risk. Not the variability of our expected returns, but what can sink the business. Risk has nothing to do with those variability of returns.